Mic check 1 2 1 2. Mic check 1 2. Hello and welcome to the stream. Today is going to be live trading week 20, specifically date 13, Tuesday. Hello and welcome to the stream. Today is going to be let me do something, correct something. We are going to be live trading CPI, Consumer Price Index, which is about to come in the next 38 minutes. Starting us off with the economic calendar. As you can see, we have three red folders aligning consecutively at 3. What we'll want to focus on, what I'll want to focus specifically will be the year-on-year release. This is the data that I want to keep an eye out because we want to see these numbers below 2%. Technically, the Federal Reserve want to see these numbers below 2% so that they can be comfortable in lowering the interest rates. But the way things are going currently at the moment, maybe we could see these interest rate cuts if these numbers justify it to happen. The probable scenarios is a look at inflation going down because food prices are down. Basically, most of the things are down in the financial markets. My high probability scenario, let me correct something with the audio. I've seen the audio is not best today to prevent distortion. I think we're good on that. Very nice. Let me confirm it on my end. Probability scenario number 1, selling opportunities. Welcome. Let the stream officially begin right now. I want to look at these lows being taken out. This is quite a healthy range for me to execute in these markets. Nearly 400 pips, quite decent, quite decent. Looking at a 400 pip target range and only a stop loss region of around 160 to 170 pips, which is very doable. But the thing is, this is what I'm fearful of. Usually, most of the times, whenever gold is moving, we'll see some sort of this pattern whereby liquidity has to be grabbed first. So I'm looking at a sell scenario. If you do have a candlestick that breaks to the upper side but closes below, we do have a change in state of delivery. I'll look for further opportunities to the downside. So this is my high likelihood scenario for the day. So position number 1, somewhere around that region, very tight stop loss, less than 100 pips. And then I'm going to have another opportunity when prices do have that change in state of delivery. This one, I would want to have the stop loss just above these highs, take profit, similar position. So these are the two positions I want to look at. This is going to be analyzed on the 1 hour time frame, but looking at the weekly perspective and what has been happening ever since the week did begin, we did see quite the rally to the downside. And I'm looking at this price action, asking myself, like, could there be higher probabilities prices continuing moving further to the downside? With all the tensions, especially for the trade wars, all the wars, Pakistan and India, when you look at Russia, Ukraine, everything right now is pointing towards, okay, we'll go back to normal market conditions that we have been used to in the past. When you look at the dollar index has been gaining over the past 4 trading weeks, with this current week taken into consideration, whereby we have seen quite the uptick after this period to the downside, whereby the dollar index has gained nearly 4% over the past 4 trading weeks, which is quite good, meaning investors could start gaining confidence into pushing more money into the financial markets. They are going to remove their money, cover their positions in risk on assets, take it to risk of assets, which is very crucial for us. Whenever you're looking at currencies, looking at gold right now, remember gold is anti-dollar. Gold thrives in economic uncertainties, and that is what we have been seeing. But what is happening currently at the moment, the uncertainties are coming down. Things are going back to normal. People are coming to the table. They're discussing, okay, things have to go on. When you look at pictures of China sports, there have been quite excessive in terms of the backlog in exports, and the United States is a huge consumer of Chinese products. So is other countries, and they would also want to come to the table. Just yesterday, we did receive news whereby China is going to lower the interest rates to 10% for goods from China, while at the same time, the US has also decided to lower their tariffs on goods from China, which is quite good looking at trades, because money has to move about for our economy to be considered doing really well. It has to go about from regions where money is being made to regions where money is being made. Technically, from regions of liquidity to regions of liquidity. Looking at this price action at the moment, look at the previous 3, 4 candlesticks, almost the same time when the dollar index did begin the massive reversal, is almost the similar time whereby gold did tap out at all-time highs. Now, specifically looking at this price action, let me use another broker. Specifically looking at this price action, we can see this particular candlestick here, whereby it did open, rally to the downside, formed a massive high, a new all-time high. This was back. This was 21st April, whereby gold did make all-time highs around $3,500 an ounce, and then we had the massive retracement before the week did close. This was the first sign that, okay, could we have found the ceiling to this move on gold? Whatever has been happening has found its ceiling, and looking at price action with considerations to fundamental analysis and sentiment analysis, things we do anticipate it will go back towards normal territories. And we did see the following week. Now, after this doji candle that we did receive, this massive rejection around the $3,500 an ounce, the following week we did get a candlestick that closed below the low that was formed during the previous week. Now, this is one of the few candlesticks that gives us a clue of whereby, okay, could the market start changing? This is a change in state of delivery whereby the markets were trending to the upper side, but all of a sudden, this candlestick closed below these lows, meaning we could see a further retracement, or even possible a reversal of this entire move that we have been seeing happen on gold, backed by data from the dollar index. When you look at the volatility index, we have gone below the 20%, which is quite interesting. This shows us that, okay, volatility in the market is going back to normal times. Usually when the volatility index is below 20, this is whereby the markets tend to behave normal. Price action is much more predictable. You can use price action to find opportunities in the markets. But whenever there's uncertainties and there are spikes in the volatility index, price action usually becomes very, very clouded. And this is something that you would want to look at as a trader based on sentiment analysis. Now, the week did begin with a gap. Looking at it on the weekly perspective, we did open with a gap, whereby the volatility index jumped from 21.8 and opened around 19.9, which is quite good. Meaning, looking into the near future, we do anticipate the markets behaving normally. The 300 to 500 pips on gold movement a day could decrease, going back to similar instances that we have seen in the past, but anything can happen at any moment. Looking at the S&P 500, massive pickup ever since this what we termed as a market crash, because this was considered a market crash when the market closed below 20%. But looking at it from these lows that was made, already the market is above the 20% region. So we can say we are already out of the market crash. Remember, when the market goes below 20%, it's considered a crash. When the market goes above 20% of the crash, we do consider that we are out of the danger territory. Looking at the NASDAQ, similar thing, and I would anticipate this movement continuing. Henceforth, we might see short-term retracements. Looking at S&P 500, I would want to see short-term retracements, maybe 50% of this candlestick. Last week, we did open with a gap. If I can go to the daily time frame, we did open with a gap, and I anticipated prices coming back down to fill these gaps for a push to the upper side. Now, prices didn't respect my theory. I'll be looking at a similar opportunity this week also, whereby if we do have a candlestick, if we do have a zone that forms, let me go down to a lower time frame. Let me remove this so that I can have a clear chart. If we do retrace 50% of this move, I'll want to look for further long opportunities on the S&P 500. Why the 50% region? Because this signifies a region of inefficiencies that the prices has not yet fulfilled. So we do have two scenarios here, whereby scenario number one, I'll wait for prices to come back to this magical retracement region. Scenario number two, I'll wait for price to come back to this gap. But I'm going to lean more towards this zone compared to this gap because of last week's price action, whereby we did see prices. Okay, yes, it did come back later. This was Thursday after. Okay, so this was Wednesday. Then Thursday prices came and filled in those gaps. But I don't want to look for a similar opportunity. I want to look for prices coming back to the magical retracement region, which is the 50% region on the Fibonacci. Yes, if prices do come to this gap, I would also want to look for further long opportunities to the upper side. But generally, I'm going to be very bullish on US stocks in the next few weeks. Same is going to apply to NASDAQ, whereby I want to look more into this region here compared to the gap. I want to look into this more. I'll use the martingale strategy, whereby I'll want to enter positions but scaling more as prices go against me. This is a very high likelihood scenario that I'm going to be looking out for this week. Same thing. We did see prices already in between the 50% and the 61.8% region on the Fibonacci, meaning already could we just see the market continuing moving bullish? Only one way to find out. If we do get a candlestick that closes above this region, a massive candlestick, a very pronounced candlestick. If we do get a candlestick that closes above this region, I will want to look for further long opportunities on the Nasdaq. So this candlestick has to close above, it has to close above this region for me to qualify this opportunity as a further push to the upper side. So if you do get a candlestick that closes above, retraces, I would want to look for opportunities. Right now, the moment, the reason why I would want to look for clearer buying opportunities is that the market is in between this region. Normally, when you execute, this is something I've just noted out of experience in the markets. Whenever you execute within price action that looks similar to these, most of the times you're going to get poor risk management. Why? Because the train has already left and it's in the middle of nowhere, or it's already in the middle of it going to where it's supposed to be. So what I would want to look out is clearer confirmation that yes, that supports my ideology. If I'm looking at buying opportunities, I want to look at it and okay, this is a this is a clear closure above this region, meaning prices could continue moving to the down to the upper side, sorry. Or if prices retraces back into the 50% region, of which it has already done, but I would want for a retracement in with the news especially, because for the move to actually mature there has to be liquidity that is engineered, and that liquidity has to be taken out. Currently at the moment we did see, look at what Monday did. We did open prices from the high, and then ever since prices started accumulating, and this is very crucial. This is something that I want to look at. This is something I am very interested in, whereby the market has already shown intent to where it's supposed to go. Now it's accumulating. We are waiting for the distribution. Now, for the accumulation here, there has to be some sort of manipulation, whereby stop losses has to be triggered for the markets to move to where it's supposed to go to. So I would want to look at clear rate of liquidity, either to the upper side or to the lower side. I would want to wait and see prices coming back down. If we do take out these lows that was formed yesterday at 5 p.m., I would want to look for further buying opportunities to the upper side. I'm not going to favor candle closures above this zone, but I also have to take that into consideration, whereby if this happens to close above this region, then I would want to look at clearer buying opportunities to the upper side. US 30, similar thing happening out, whereby, let me remove this, Fibonacci from this low to this high. So on US 30, the retracement has already started being pronounced. Yes, we did see on Nasdaq already did tap with these candlesticks at 6 p.m. yesterday. But I want to see the same thing happening today within the markets, looking at opportunities, long opportunities on S&P 500 to the upper side. Even a one-to-one risk to reward ratio is going to be interesting enough for me on this particular execution. But I want to have it at the midpoint, somewhere around that region, whereby I'm looking at 4,000 handles on this particular execution. So Russell, this is just a confluence, but looking at small, medium cap stocks, very interesting stuff to look at, whereby prices are picking to the upper side. Treasuries, treasuries are continuing to be dumped. Very interesting. So these are the 20-year treasuries being dumped currently at the moment. Now oil is back to 65, above $60 a barrel, which is something that we would also want to see, because usually low oil prices tend to signify a recession. So there has to be a perfect balance in price of oil for the economy to be sustainable and efficient, because low oil prices usually tend to have a trickle effect on the economy. Too low of oil prices could signify a very, very tough time ahead for the people, whereby for new oil wells to be dug, the prices of oil need to be at least trading $60 a barrel, at least above $60 a barrel. For people who have oil wells already, they can manage something above 35 to $40 a barrel. They can still be profitable, but it really eats into their profit margins. Bitcoin did break their 100,000 barrier, had a short-term retracement. Currently, we are correcting that move. This was a good opportunity for you to go long on Bitcoin yesterday, whereby we have seen Bitcoin up 0.7% on the day. USD Chinese yuan, the United States dollar is gaining against the Chinese yuan. If you look at it over the past few trading weeks, we did see prices tap into highs that was made quite a while back. The last time prices were there was quite some time back in 2023 September. Prices did tap into that region, and then we had a massive sell. This was quite massive. I remember looking at price action from this high to this low. This is almost 2.24% of the total value of the United States dollar against the Chinese yuan, whereby prices has moved almost 1600 pips to the downside in favor of the Chinese yuan. Sorry, the United States dollar has been tanking against the Chinese yuan. Point of correction for that. Euro USD, I was looking at this opportunity, but news came in. I remember this was Trump's speech and all that was happening. Prices did take me out. We did go to lower regions. I want to look for further re-entry positions, but I will want to wait for price action to be clearer because we were looking at the United States dollar being weaker for the past few weeks because of the trade wars, the tensions, and everything. But the news that we have received, especially the news we are going to anticipate in the next 17 minutes, could that change what we were thinking? And this is part of trading whereby you need to have the capability to be able to change your bias according to market conditions. You need to have the ability to react to price action because there is bias fixation whereby you'll be looking at buying opportunities. Let's say if I am in a buy position like this, for example, it's so hard for me to look at this as a trend to the downside. Why? Because psychologically, I'm already attached to buying positions. Make sense? So sometimes you need to have the capability of, yeah, I was looking at buying opportunities, but could what be whatever is happening right now, could it favor more selling opportunities compared to buying opportunities? So you have to look past your emotional aspect and ask yourself, okay, what could be the best decision for me to take at this moment in time? Very interesting stuff to watch. So this is going to be I'll look at currencies after the news has been released. The news is going to be very crucial for me today because yes, we did see NFP numbers gain quite a bit. With inflation numbers are due to come out today. We do have Jerome Powell speaking tomorrow. If you can just look at that data. So we are anticipating 2.4% on the year-on-year release, a slight peak in inflation at 0.3% on the core CPI and the CPI itself. Very interesting. We would want to see this pick up because if you look at it on the historical data, we did see it quite move to the downside. So we want to see it quite pick up at 0.3%, which is quite good, Inflation is still cooling down ever since highs that was made back during the COVID region. And this is what we want to see in the financial markets for us to be confident of rate cuts in the near future. We do have Bank of England Governor Bailey speaking at exactly 6 p.m. Very interesting. We will want to see what the Bank of England has to say about, especially the trade deal that happened in between the United Kingdom and the US this past week, whereby it's quite an interesting deal. There is a lot to be gained for both countries in terms of economic value. We'll want to see what are the insights they have on the upcoming news events. Tomorrow, Jerome Powell is going to be on Thursday after PPI. This is going to be very interesting. So we are going to have PPI 330 and then the Fed chair 340. It's going to be very active for the United States denominated pairs at 3:30 p.m. on Thursday. Friday, we are going to have prelim UM consumer sentiment. But the highlight of this week, starting off with where we are currently at the moment, CPI numbers. CPI numbers is where all of our eyes are going to be tuned in at the current moment in time. Euro dollar, yes, we did see this was the pause of the China tariffs and the US tariffs. We did see quite the dollar gaining in value against the euro, whereby, yes, very much anticipated. We are looking at, okay, what could be the next point of interest for us, whereby looking for further opportunities, buying or selling. I want to change my bias today officially, whereby I've been looking On gold, I started this theory. I started the analysis session of whereby we could start seeing selling opportunities a while back, but on currencies, I was still favoring safer havens compared to the United States dollar. But today, I'm going to flip my bias to officially the United States dollar could be stronger in the upcoming few weeks if the data starts today being stronger. So if you do get good inflation numbers today, from today, just after the numbers, I'll be looking for going long on United States dollar. GBP USD, beautiful trade we did have, beautiful trade. But looking at it currently at the moment, I want to be very cautious with the numbers that are going to be released in the next few. Very interesting times to be trading currently at the moment. Looking at stocks, just a moment. Let me open a new chart. So most of the companies are in the green. Looking at technologies up on the day, communications is down, interesting. Industrial is down, distribution is down. But looking at retail, electronics, finance, health, and technology, consumer durables is down. We're down to look at producer numbers coming out on Thursday. This will be very interesting on the aspect of consumers, utilities, and the durables, consumer services. Basically, on the right part of this chart, will be affected with the data coming out on Thursday. But for today, we want to look at the consumers. What are the consumers thinking about the financial markets or about the economic outlook? So looking at inflation once again on the year-on-year numbers, looking at this beautiful graph whereby we did see this was when there were massive cuts. When COVID did strike, the Fed Reserve went for aggressive cutting in interest rates, and that was to stimulate the economy with COVID and all that. But later on, they started doing what? It did work. It took quite some time. It took quite some time. When you look at it ever since 2019 to when inflation did hit, it did peak towards the end of 2022, whereby we did see inflation numbers on the highest at 9.1. This was July 2022. The market started interpreting that data towards safe havens October, November, December, whereby we did see gold. If you look at historical price action on gold, especially around that time, let's go to the daily time frame. Going back to 2022, we did see quite an interesting price action on gold. It was around this region here. Yes, this was the point whereby we did see gold XAUSD, and this was the last time XAUUSD was at $1,600 an ounce. This was when inflation now did peak. This was the peak of inflation whereby things were like, okay, the United States could be in trouble currently at the moment, and prices has never gone back to those lows ever since. So looking at this chart, looking at fundamentals, looking at everything currently at the moment, the next step for the financial markets could be at the hands of this data that we are supposed to release, that we are supposed to get in the next 9 minutes. And when this comes out, we wait for Jerome Powell's next step, especially after Trump did mention a few harsh words to him. He did mention talking to him was like talking to a brick wall. We will want to see what the brick wall has to say on Thursday when when the data is out. Because looking at Powell, he's so good at looking at. If you look at the news releases that he usually focuses on, the first one, when he was asked, he was like, "We usually look at unemployment numbers, so that's NFP, which came up last week. Good. Now, if Today's numbers come out also good, inflation numbers coming out good, and then we do have PPI also coming out positive. What else could be waiting for except that his confirmation or his assurity? Yes, he cannot give us assurance, but could his tone shift to, okay, we might need those interest rate cuts as soon as possible? And this is what we want to digest today in the next 7 minutes, 14 seconds. So let me split my screen. In preparation for what is about to happen. CPI is very volatile. I would advise you, if you are new to trading, don't put your life savings on all of one basket. So I like the price action currently at the moment. So, okay, one last time, what could be my entry proposition? So we have already started selling. I want to have sell limits around 32.66. It's quite away. It's quite a distance away. That's like 800 pips, quite significant. But I want to wait for prices coming slightly. We will take out these lows at 3,200. That's very high likely. That's really, really likely in the financial markets whereby we do take out those lows. Okay. This is whereby tensions really put you to the limit. They put you to the test whereby no one knows what's going to happen next. We can only react. We can only do our due diligence. We can only do as much as it's required. We can only go so far, but it reaches a point whereby faith has to take over. Faith has to take over. And it's faith in your strategy, it's faith in yourself, it's faith in the unknown, because it's usually very wild, it's usually so fast, it happens so fast, and it can really mess up your day. News trading, you can be okay, you can be doing so nicely, you trade CPI and then your whole month is destroyed. Or even I've seen cases whereby it's taken people quite some time. Why? Because they were not prepared psychologically for anything can happen. Yes, we do enter this world of trading anticipating for the best. And it's very good having such positive outlooks when you get started. But along the way, no one tells you this, and I'm here to confirm it to you, and I'm here to assure it to you that it's interesting. I won't say it's hard, I won't say it's difficult. I won't say it's easy, I won't say it's like a knife through butter. But one thing I can already, I usually tell clients, I usually tell people who are aspiring to be traders, you are going to learn about yourself more compared to the markets because you're going to understand emotions at a personal level. It's easier blaming brokers, it's easier blaming your account, it's easier doing all those things. But if you look at it deep down, it was your hand on the trigger. And you don't kill the messenger, but most of the times, it's our own fault that we don't make money in the financial markets. You could be a trader, the markets have, okay, we are selling, it's already leaving me. Then what do you think about? Should I execute this position? What should I do? And that comes from a lack of preparation. When you don't prepare enough, especially for high impact times like this, you have to be an athlete, you have to be on top of the game. Have a plan. Have a simple plan. Don't have a complicated plan of executing. Have a simple look at zones. let's say, for example, this is the plan that I'm looking at. If prices comes back to this region here, I want to look for selling opportunities. I don't want to complicate it further than that. The data is going to come out. It's going to shake a few people. It's going to create a few volatile minutes whereby a lot of tears, a lot of blood is going to be shed in the next few minutes, in the next few seconds, so to be exact. And it's okay. This is what I want to tell you. It's okay. It's very normal because there's always two sides of the coin. When you buy, 50% of the times it's going to go in your favor, 50% of the time it's not going to go in your favor. When you sell, the same could be said. The next trade can change your life, and that's what keeps me going. The next button I press, either to buy or sell, could literally change my life, and I've seen it. And for me to get to those probabilities, I have to be executing consistently. I have to be there. I have to show up each and every day. Whether I feel good, whether it's raining, whether it's what, you have to. Because the man who is consistent is more bound to be lucky in the long run. The more positions you execute, the likelier you're going to be successful. As much as cliche that sounds, yes. The more positions you execute, the higher the likelihood you're going to be successful. But this depends on your psychology. If your psychology is not okay, the more you execute could be could be very, very bad to you or your trading account specifically. We do have less than 48 seconds. So once again, this is the point whereby if you are a believer, if you're faithful, if you are believe in whatever you believe in, there are things I believe in, but whatever you believe in, yeah, this is the time to call upon those. The market does not hear prayers, but it really helps comfort you. Because in times of uncertainties, you need to look at something that is going to give you that small leap of faith. 7 seconds to tears. Let's look at the numbers. Bloodshed, here it is. Okay, so that, okay, interesting. Inflation is calming down. Very good, very good. This is what you want to see. Now, these are good numbers. Yes, it's come out at red, but if you look at it on the point of the Federal Reserve, especially Fed Chair Jerome Powell, inflation is cooling down in the United States of America, and this is something very interesting to look at. So this is going to be my execution. I'm going to have a sell limit at the bodies of this candlestick, just where it started there. I'm going to have 100 pips to 140. Okay, 100 and this candlestick. Let me have it at these at the start of this candlestick here. Why? Because this is a region of inefficiency. So if we do break above this region, there is a high likelihood prices will continue moving further to the upside. So I want to have a sell limit around this region. I'm going to target the lows. So this is a risk to reward ratio of 1:3.37. Quite interesting. Risking almost 160 pips, targeting 530 pips. If you're executing using a 0.01, this is equivalent to $15 in terms of loss or $50 in terms of profit. 0.1 aggravates the zeros, so that's going to be 150, targeting 500. Quite interesting stuff to note, but these are the inflation numbers. The inflation numbers has actually come out. It's red, but looking at it from the points of consumers, it's good, whereby inflation is cooling down in America, and we want to see this chart continuing being bullish for the United States dollar. If interest rates are still going to be held stable, but if interest rates do cut, then that's a whole topic on its own. But looking at the fundamental news release that we've just had today, quite interesting, very beautiful stuff that we are receiving. And once again, I'm going to leave my position, so I'm going to remove this one. I want to wait for this clear. This is a higher probability setup for me compared to the other one, whereby I want to look at prices retracing slightly to the upper side, grabbing liquidity, shaking people off this board for a continuation further to the downside. That's going to be it for me. We do have, can we place pending orders? Yeah, I do have pending orders. For me, I have pending orders above this region at 32.62. But do your due diligence. Do your due diligence. This is a highly likely scenario that I'm looking at. Let's look at other assets before I call it a day. Dollar index. Dollar index. Okay. This is a liquidity graph that we are seeing. We have equal lows on the dollar index. Very interesting. This actually supports the entire mission I have on gold, whereby if this candlestick breaks to the lower side, where are you, darling? If this candlestick breaks to the lower side, but we have a change in state of delivery, I would want to look for further continuations to the upper side on dollar index. I'm not going to execute on dollar index, but this is something I would want to see happen in the financial markets. So my stop loss is going to be dependent on the entry price. Looking at assets, currencies, so to say, euro dollar, very interesting. The accumulation phase. Now, for me, looking at it from my point of view, is we don't have any liquidity raided. There's still no liquidity which has been raided, and we want to see a clear raid on liquidity, because that's what usually creates the move that the markets are supposed to fill in prices, whereby for people to buy. Okay, GBPUSD, very interesting, very good trade, very good trade. Makali, you remember this opportunity that we were looking at on GBPUSD? Very interesting stuff. USD CHF. I did take a breather from USD I was waiting for this zone. It did go up to the upper side. This was yesterday. So this could be a good opportunity for me. Interesting. Interesting stuff currently at the moment. This could be a good opportunity for me to look for opportunities further to the upper side on USD Swiss franc. Very interesting. I've been waiting for this opportunity for the last, ever since prices was here. So I've been waiting for it for like 15 days, and I would want to. We did have selling opportunities, if you can remember, but we did close because price action. Actually, it was because of these equal lows that we had around this region that we did close the positions on USD Swiss franc. Now, looking at it in hindsight, that was the best decision we did take. Closing our sell positions on USD CHF and looking at it, yeah, sometimes that's what is needed, whereby you'll be looking at buying opportunities. Never be fixated to one idea, because you never know what is going to happen. You can be so into sales. No, I'm selling the markets. You fail to overlook that the market could be buying, and then you end up hurting your ego even more. And the day you hurt your ego is a good day to build your soul. And I remember this was a similar opportunity that we had on USD JPY while we were looking at USD CHF, and it didn't play out on this particular scenario. Moving over to the few assets that we are supposed to look at, USD Canadian dollar. I want to wait for clearer price action to continue playing out. I don't like executing more than three assets at once, because I'm human. I cannot be looking at buying on GU, selling on GJ, buying on USD CHF, looking at opportunities on USD CAD. It usually, you only have one pair of eyes. There's so much you can look at with only, and having 10 screens in front of you doesn't help the situation. So this is going to be the opportunity that I'm going to be looking at, focusing on, because of the analysis I've done, looking at S&P 500, looking at the Nasdaq. Very interesting. Oh, this is okay, very interesting, very interesting. If this candlestick closes above this region, this is what we were looking at. If this candlestick closes above this region, the next candlestick opens, which to the downside, I want to look for clearer buying opportunities on the Nasdaq. This is going to be something that I'm going to participate today also in. This is playing according to the book. This is the reason why we have plans. You need to have a plan, execute your plan. Plan your trades, trade your plan. I would want to wait and wait for these opportunities to mature, but this is the good thing about having pending orders. Set your pending orders, put your stop loss, have a normal life. Anyone can be a trader in the financial markets. Literally, anyone can be a trader in the financial markets. That's going to be it for me. Have a blessed day. Take care of yourselves. May God protect you. May your enemies respect you. May death neglect you and your family. I'll see you in the next session.